Hey YouTube, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys hit the like button and subscribe. And also don't forget to check out my website, daytradingfearless.com. $50 for a lifetime subscription of the weekly trade zones for the S&P E-mini futures, and also check out my Patreon page at patreon.com/daytradingfearless, where you can follow along with my trading portfolio. But as always, let's jump right into it. And in this video, we're going to talk about mainly how to draw Fibonacci retracements and Fibonacci extensions, and how to identify which highs, which lows should you go off of, which are the more relevant ones. And one of the things that I'm going to just start off and say is you need to put your 10,000 hours in, right? If you've never heard of that, it's do something for 10,000 hours, and I guarantee you by the end of it, you will be a professional at doing that thing, right? I've put in well over my 10,000 hours, as I've been doing this for 20 plus years. So with that being said, let's start with a Fibonacci retracement. Now, Fibonacci retracement is usually the high to the low, right? So I'm going to just take, right now, I can choose a time frame, right? It really doesn't matter what time frame you're on, but if you're like scalping for 10 cents, don't be looking at a 15-minute chart, look at a 1-minute chart, right? But if you're looking for bigger moves where you're swing trading, 15 minutes, 20 days worth of time frame. That's what I have, right? So 20 days with 15-minute candles. Okay, every candle represents 15 minutes. So I'm going to just go, okay, hey, here's the low, here's the high of this entire move up, right? Because we're starting to roll over. We're no longer making higher highs. We could see that we're making lower highs, lower lows. Another thing is, if I just drew a trend line up, I could see we're now on the other side of this trend line. That's probably tip number one. Okay, is just draw a trend line, and when we're on the other side of that trend line, that's usually where you want to start to draw, or that's where we see, okay, hey, let's draw our Fibonacci retracement. So we're going to go from this low, okay, from this low all the way up to this high right here, okay? And try and get it perfect when you're doing this so you have exact numbers, okay? And one of the things that we'll want is we're going to want on the basic Fibonacci, the ones I like to use are these three right here, the 0.38%, the 50%, the 0.618%, and the 100. Okay, and this is what it looks like. Now, some people use the 23. For me, I'm not a big fan of it. Some people like to use the 78. Again, same thing. These are my three major ones. Okay, and usually the longer the move, the better the bounce off of the 38%. I can't make this up, right? All I do is draw from here to here, okay, on the S&P E-mini futures. And look at this. So on the pullback, we pulled right back to the 38%. And it, again, if you just took a normal trend line, you could even drawn it from here probably, but because we made the new high, like my first trend line would have been here. Once we broke and made new highs here, I would then draw it from here. Okay, we're on the other side. Okay, remember, this is about how to draw and figure all this out. Now, so the trade would be when we come back down, does anything line up with this 38 that we can lean against, right? Well, yeah, we have a high here. We kind of have all this price action over here. And I'd say, hey, we also have a high here, so maybe we overshoot a little bit, come down here, but I kind of like all this area right here, and price came directly down to it. Now we bounce, okay, so that's one winner. Now, if we fail and we start to come down here some more, okay, I like this 50% level, because 50% is a very, very good, especially longer the trend, more secure the bounce will be, type of trade, right? And same thing. What's down here? Well, we have a swing low here. We have a swing low here. We have a little high before a failure, breakout, retest, right? We also have all this area where we fail, come back, and then fail. Over here, we have, it looks like maybe a potential gap somewhere over here. We also have this little swing low from what we could see. Okay, so we have multiple things. There actually, if we kind of go farther, we actually see all of this, right? This was potentially a breakout level, fail, right? So as we come back down, we now have multiple confluence levels to come down here that I really like. Now, this is where I personally, if this is all I saw on the chart and I'm waiting for this, I see an M pattern, right? As you guys know, if you follow my videos, M stands for meltdown, double top, looking for a bottom. A W pattern like we have here, okay? W stands for winner, okay, to get long. So with this pattern right here, I would grab my Fibonacci extensions, okay? And I would come over here and I would go to the very high to probably the base of the low. So I would probably first draw here to see if there's any confluence. So let's remove these real quick. Okay, and let's draw from the high to the low and then back up. Okay, right back up to the high. Well, we see the 127's right up around the 138, give or take. The 1618 is right at the 50%. Okay, so we now have another layer of confluence for price to fail, or sorry, potentially to bounce. And then we have our 200 right by our 618%. Now, just to see, I'm also going to now draw from this high all the way down to this low, because this is the lowest low of that swing. I'm going to see if other things really match up or not. And if you look, really nothing matches up, right? There's no confluence. So I'm going to just kind of pass on this, and I would probably trade based off of these lows right here. Again, this is part of your 10,000 hours of training. When you see the same patterns over and over and you draw this 10,000 times, you'll learn, okay, hey, do I draw from here or to here? Well, you'll also start to see in your eyes, hey, without even drawing them, this will probably be the more likely one. It's not something you could be taught. It's something you have to do over and over and over. And the thing is with this, you'll actually want to draw from here and then also draw from this high to this low, right? While you're learning to see, okay, hey, what matches up? And when you see that this matches up perfect right here, but this one really didn't, let's use that. Okay, now let's also look at this move. So let's say this is all we saw right here. And I don't even know if this is going to work or not, but this is all that we see right here. I'm going to go, hey, if price rolls back over and breaks below this low, this is going to be my first level. But because I believe if I draw a fib extension, if I flip this over, the 200 might be somewhere around here. Okay. Also, we have a shoulder, head, shoulder, potential head and shoulder. So I'm going to draw from there, from that high to this low, because this is the downfall, the lowest point, and then back up. And I'm going to go all the way up. And look at that. Our 200 matches up almost exactly with our 38%. And look at what price does on its way down. Comes down, right? It reverses, comes right to the 127, bounce, goes sideways, blows through the 1618, because if we look over here, the only thing there was this, all this, but it just didn't respect it, and it went all the way down to the 200, which is also that, and then a nice powerful move all the way back up. So again, you could have tried to maybe say, hey, let me buy some here. If it bounces, buy a little more here. There's a bunch of ways, or you could say, hey, let me look more for this, because maybe this is the push. This came close enough for that test that next time it might blow through. We don't know. That's why we need to use stops and risk management, but also have a plan. People that I try and help and I teach and all that is have a plan when you trade. Let me buy some here, look for a bounce, add here, or buy. If it doesn't work, get me out, and maybe buy, and then my stop is down below here somewhere. Okay, just have a plan of what to do before the trade gets there. Just like if I was to take this trade right here, I would have a plan, and this is what my plan would be. If I was to take this trade, I would say, hey, this lines up, this already has been touched. This is a nice M pattern. We might see a flush. I really like this. So maybe I'll put a first position here. I will add to a position at the 200 on this. And my stop will be maybe below this little swing low or this swing low. I would probably use this one as, hey, I'm out. I'm wrong on the trade. But guess what? If price comes down and we come down and we bounce, I'm a winner. I never even got that second fill. Maybe price comes all the way down, fills, and then as I start to go up, once I get back up here, I take this off, so I lock in profits. Maybe I take the whole position off because I don't like something in the market. But think about it. If I buy here, I add here on the bounce, okay, I could make this and then I break even on this. It's a winner, and that's my trade plan maybe. Like I said, have a trade plan when you go into this. I hope this really helps to understand how to draw Fibonacci's, to trade Fibonacci's, and also using Fibonacci extensions. They are both great tools for learning how to trade. But as always, thank you so much for watching. Make sure you guys like and subscribe to the video. And until next time, we'll talk to you soon.